In October 2008, the world was reeling from the shock of a global financial crisis. Amidst this turmoil, an enigmatic figure named Satoshi Nakamoto introduced a radical new vision for money. Through a white paper titled Bitcoin, a peer-to-peer electronic cash system, he proposed a decentralized currency that could enable direct transactions between individuals, without the need for banks or governments. Notably, Satoshi never revealed his identity, underscoring Bitcoin's core philosophy: trust should lie in the system itself, not in any central authority or individual. The concept of peer-to-peer, P2P, is simple. Like trading items directly with a friend, no intermediaries are required. In traditional finance, trust is enforced by banks and regulators. But Bitcoin removes these middlemen, replacing them with cryptographic algorithms and a decentralized network. At the heart of it all is blockchain technology, a system where transactions are grouped into blocks, linked chronologically, and shared publicly among participants. This ensures transparency, security, and immutability. On January 3, 2009, Satoshi mined the very first Bitcoin block, known as the Genesis block. Hidden within it was a message: the Times 03/Jan/2009 Chancellor on brink of second bailout for banks. This headline from a UK newspaper reflected the fragility of the existing financial system. Satoshi's embedded message served as a subtle yet powerful critique, and a declaration that Bitcoin offered an alternative. Just 6 days later, on January 9, the first open-source Bitcoin client was released, marking the official launch of the Bitcoin network. Early miners didn't just validate transactions, they helped test, improve, and stabilize the protocol. Their enthusiasm and collaboration laid the groundwork for Bitcoin's global expansion. Then, on May 22, 2010, a seemingly ordinary event became legendary. Laszlo Hanyecz, a programmer in Florida, bought 2 pizzas for 10,000 BTC. It was the first known real-world Bitcoin transaction, now commemorated as Bitcoin Pizza Day. At the time, 1 BTC was worth about 8 cents. By 2025, that same 10,000 BTC would be valued at over $1.2 billion. Although Bitcoin's price was wildly unstable in its early years, this milestone signaled its transition from a technical experiment to a viable form of currency. In retrospect, Bitcoin was never just about code, it was a rebellion. It challenged the dominance of central banks and proposed a new trust model for the digital era. This marked the beginning of Bitcoin's journey, a movement born from lines of code, destined to reshape the world of finance. In its early years, Bitcoin stood for an ideal: a decentralized, anonymous, and free monetary system. But as its reach expanded, it soon collided with harsh real-world complexities. On the dark web, Bitcoin revealed both its transformative potential and its dangerous duality. In 2011, Silk Road, an underground marketplace, launched and quickly became infamous. Bitcoin served as the primary payment method for illegal goods like drugs and firearms. Its pseudonymity and lack of centralized oversight made it the currency of choice for such trades. In 2013, the FBI shut down Silk Road, and its founder, Ross Ulbricht, was sentenced to life in prison. The case cast a shadow over Bitcoin, branding it a tool for crime in many eyes, but it also thrust decentralized technology into the global spotlight. That same year marked a divergence in global responses to Bitcoin. In the US, FinCEN began recognizing virtual currencies as money services, laying the groundwork for regulatory oversight. Meanwhile, China took a much stricter approach, banning financial institutions from facilitating crypto transactions. This shocked the crypto world, especially given China's dominance in Bitcoin mining, and created ripple effects across global exchanges. In 2014, the ecosystem was rocked by one of its most devastating moments. Mt. Gox, the largest Bitcoin exchange at the time, was hacked, losing approximately 850,000 BTC. Worth around $450 million then, now worth tens of billions, this breach led to the platform's collapse and sparked widespread concerns about security and centralization risks. In response, innovations like cold storage and multi-signature wallets were adopted, and the community became more aware of the vulnerabilities of centralized platforms, reinforcing Bitcoin's original decentralized ethos. Despite the setbacks, Bitcoin's philosophy and infrastructure continued to evolve. In 2012, the Bitcoin Foundation was established to support core development, educate the community, and bring structure to the ecosystem. Around the same time, WordPress began accepting Bitcoin as payment, showcasing the currency's real-world usability and helping improve its public image. Then in 2016, a historic milestone arrived. Japan officially recognized cryptocurrencies as legal forms of payment. This move by a major economy became a global reference point, proving that Bitcoin could be more than a speculative asset, it could function as a practical currency. It also inspired other countries to begin considering crypto regulation more seriously. Technologically, Bitcoin matured rapidly during this period. Mining difficulty and hash rates surged, enhancing the network's security. The introduction of ASIC miners improved efficiency, and discussions began around scaling solutions like the Lightning Network, offering a glimpse of Bitcoin's future. Looking back, the years 2011 to 2016 were Bitcoin's coming-of-age era, a time marked by conflict between idealism and reality, and by breakthroughs forged through crisis. Events like Silk Road and Mt. Gox exposed flaws, but also underscored the need for better security and clearer regulation. Institutions like the Bitcoin Foundation and Japan's bold move toward legalization laid the foundation for legitimacy, while technical progress prepared Bitcoin for mainstream adoption. These hard-won lessons would fuel Bitcoin's evolution into a global financial force. In 2017, Bitcoin entered a phase of explosive growth. Its price soared, and global interest surged. During this time, Bitcoin evolved from a niche technological experiment or ideological statement into a recognized investment asset. At the start of 2017, one Bitcoin was worth around $1,000. By year's end, it had climbed to nearly $20,000, a 20-fold increase that caught the attention of not only individual investors, but also media outlets, regulators, and major financial institutions. However, this rapid ascent also sparked concerns about speculative mania and market bubbles. In August, internal conflicts within the Bitcoin community came to a head. Disagreements over network scalability and high transaction fees led to a hard fork, resulting in the creation of Bitcoin Cash, BCH. Though framed as a technical solution, the fork exposed deeper philosophical rifts within the ecosystem. It became a landmark example of the challenges and flexibility of decentralized governance. Meanwhile, Bitcoin took major steps toward integration with the institutional financial system. U.S. exchanges CBOE, Chicago Board Options Exchange, and CME, Chicago Mercantile Exchange, launched Bitcoin futures products, making Bitcoin the first cryptocurrency to underpin officially regulated financial derivatives. This opened a legal and secure path for institutional investors to enter the crypto market. But the bullish momentum didn't last long. In early 2018, Bitcoin's price crashed, falling from nearly $20,000 to under $6,000 in a matter of months. Governments began referring to it as a bursting bubble. South Korea introduced legislation banning anonymous crypto trading, while some countries went further by shutting down exchanges altogether. Even so, Bitcoin's technological development pressed on. Layer 2 solutions like the Lightning Network emerged, promising faster transactions and lower fees. These advances laid the groundwork for more scalable and efficient use of the Bitcoin network. In 2020, adoption accelerated once more. PayPal, one of the world's largest payment platforms, announced it would support the buying, selling, and use of Bitcoin and other cryptocurrencies. This decision marked a major turning point, signaling Bitcoin's arrival in the consumer financial space and further legitimizing its use in everyday commerce. In summary, the period from 2017 to 2020 marked a defining chapter in Bitcoin's journey. It transformed from a speculative asset into a global store of value. With growing public awareness and the beginning of institutional adoption, Bitcoin positioned itself as a permanent fixture in the modern financial landscape. In 2021, Bitcoin entered another critical phase, this time driven by the involvement of powerful entities, corporations and nation-states. One of the most symbolic events came when Elon Musk and Tesla made headlines by purchasing $1.5 billion worth of Bitcoin and announcing plans to accept it as payment for Tesla products. This marked a paradigm shift, as traditional corporations began viewing digital assets not merely as speculative tools, but as strategic financial assets. That same year, El Salvador stunned the global community by becoming the first country to adopt Bitcoin as legal tender. Despite vocal concerns from institutions like the IMF, the Salvadoran government moved forward, launching its official wallet Chivo and allocating part of its national reserves to Bitcoin. This bold initiative aimed to integrate cryptocurrency into the national economy and served as a blueprint for sovereign-level crypto adoption. These bold moves sent ripples across global finance. Asset managers such as BlackRock and Fidelity accelerated efforts to develop crypto-backed investment products. After years of delays, the U.S. Securities and Exchange Commission (SEC) approved the first spot Bitcoin ETF in 2024, a landmark moment that enabled billions of dollars in institutional capital to flow into the crypto market through regulated channels. Bitcoin's price surged to $68,000 in 2021 before correcting amid the economic downturn and interest rate hikes of 2022 and 2023. However, with the ETF approval in 2024, market confidence rebounded, pushing Bitcoin past the long-anticipated $100,000 milestone. Meanwhile, Bitcoin's technical foundations matured significantly. Security and scalability improved across the network, while the Lightning Network gained traction through real-world applications, offering fast, low-cost transactions in commercial environments. Growing concerns over environmental sustainability also led to major investments in green mining initiatives, helping position Bitcoin as a viable part of future-ready, sustainable financial systems. In summary, from 2021 to 2024, Bitcoin moved beyond its experimental phase and solidified its role as a strategic asset within both national economies and institutional portfolios. Bitcoin was no longer an outsider, it had become an established pillar of the global financial architecture. In 2025, Bitcoin has transcended its origins as a speculative investment. It now stands as a national strategic reserve, a core component of institutional finance, and a foundational element of digital infrastructure. This transformation is not merely about price appreciation. Bitcoin's role has been fundamentally redefined across the political, economic, and technological spectrum. The year opened with a symbolic event. In January, MicroStrategy announced an additional $1.1 billion Bitcoin acquisition. The news reignited bullish momentum, pushing Bitcoin back above the critical $100,000 psychological threshold. In March, the U.S. government officially disclosed holdings of 198,000 BTC, publicly recognizing Bitcoin as both digital gold and a strategic reserve asset. This move formally elevated Bitcoin's status within the dollar-centric global financial architecture. On May 22, the 15th anniversary of Bitcoin Pizza Day, Bitcoin surged past $110,000. By mid-July, it reached a historic all-time high of $123,000, drawing global attention from investors and the media alike. During this time, the U.S. Congress passed landmark legislation, including the Genius Act, that established clear regulatory frameworks for cryptocurrencies. The act outlined stablecoin issuance standards and placed boundaries on central bank digital currencies, CBDCs, easing long-standing regulatory uncertainty. International financial institutions followed suit. Deutsche Bank recognized Bitcoin as a key component of diversified global portfolios. Standard Chartered launched Bitcoin trading services for institutional clients, while Grayscale initiated formal steps to list on U.S. stock exchanges, further institutionalizing the crypto sector. Technologically, Bitcoin has evolved beyond a simple digital currency. Layer 2 solutions now enable ultra-fast, low-cost transactions. Public and private sectors alike are integrating Bitcoin infrastructure into areas such as cybersecurity, digital identity, education, and accounting. In summary, 2025 marks the year digital assets transitioned from alternatives to financial mainstays. Bitcoin is no longer experimental, it's a foundational pillar of the global economic system. And this transformation is only beginning. By 2025, Bitcoin is no longer an outsider, it has been fully integrated into the global financial system. The conversation has now shifted to a more forward-looking question: what comes after Bitcoin's institutionalization? One of the earliest signals of this changing landscape is the shift in demand for U.S. Treasury bonds. In the second quarter of 2025, net purchases by foreign central banks hit a decade low. In response, some countries are reportedly diversifying their foreign reserves by adding Bitcoin. This suggests that emerging economies may be adopting Bitcoin as a new form of digital gold. Another significant development is the formal entry of stablecoins into mainstream finance. Following the enactment of the Genius Act, U.S. dollar-backed stablecoins are now backed by guarantee mechanisms linked to the U.S. Treasury. Within this system, Bitcoin is emerging not only as a store of value, but also as a reference asset for the stablecoin ecosystem. These structural shifts highlight Bitcoin's evolving role. It is no longer just a speculative asset, it now serves as a digital reserve for financial institutions, a hedge for multinational corporations, and a form of personal digital insurance. Technological progress continues as well. Bitcoin is being extended via smart contracts, enabling broader use cases. It is also being explored as a settlement layer for cross-border transactions, and as the foundation for trustless financial systems. However, challenges remain. Environmental concerns, privacy issues, and the lack of global tax standards may slow Bitcoin's path toward becoming universal financial infrastructure. Yet, a common thread underpins all these developments: Bitcoin is not going away. In short, the future of Bitcoin is not about price, it's about its role in reshaping global monetary architecture. Can Bitcoin evolve beyond digital gold to become the backbone of a new financial system? That answer is still being written, and we are the ones writing it.